Volatility contraction patterns are used by some of the world's best breakout and momentum traders, such as Mark Minervini, who actually coined this phrase, to successfully and profitably trade breakouts and momentum stocks for a long period with big upside and low risk. A volatility contraction pattern is ideal for those looking to make big gains and keeping their risk low, which is key to successful long-term investing. So on the charts in a minute, I'm going to take you through what a volatility contraction pattern is, how you can spot it, how you can use it for your trading, so hopefully you'll become more profitable. But first of all, let's cover what is a volatility contraction pattern. In short, it is a sideways movement in share price, that the volatility of the share price is decreasing, it's contracting, and at the same time we've got the volume decreasing and contracting. So what we're looking for is that sideways movement in share price, and it should create these small waves, and what we're looking for is the waves in the share price to get shorter on each contraction. So let's jump straight into it, because that'll be the best way to show you. So on the chart here, I've got loaded up Green Plains. This was back in 2003. And you can see here I've highlighted, or I've drawn a rectangle box around what is a successful volume contraction pattern, and I've also drawn a line here representing the contraction in volume. So what we can see here is we've got a big price increase. Some might say this is a gap up. So we've got a gap up, a big price increase, and then you can see we've got the price moving sideways within this box here, and you can see that the volatility is contracting. Okay, the price spread is tight, it's a tight trading range, and you can see the volume is diminishing and contracting from the gap up to when it actually breaks out, which is this bar here. So I'm just going to talk you through it and highlight it. So our breakout bar, when we're breaking out of the highs, is this one here, and the associated volume on that day is the big green bar that you can see in here. So what we're looking for when we're trading volatility contraction patterns is, after this sideways movement, is when the breakout comes and it breaks into a new high, is we need the volume increase there to show that this is a real price move, it's a real increase, and that the strong hands, okay, have accumulated the shares from the weak hands, they've soaked up the supply, so then when it moves into the higher ground, there's not going to be loads of shares come and flood the market. So that's why we want to see the low volume in the sideways movement, which helps us determine that there's not many weak hands, there's not many sellers out here. So as you can see here, we get a breakout, and then we get a subsequent breakout or two where we could have added to our trade. So we're watching this here, which happens over, that'd be 4, 8, about 12, 13 weeks for this volatility contraction pattern to happen. So our first entry point would be here on this first rectangle. This is the associated volume, and you can see after the breakout, the volume then diminishes again down here, but then we do subsequently get bigger volume coming in here as the share price is increasing, which would be quite a good risk versus reward position to be adding to our trade. And you can see as this goes further along, there's other contractions as we go. This is quite a big one, but you can see the subsequent volume coming through. So there are different places during this trade that we could have added to the position and then subsequently sold into strength up here, potentially selling into the first signs of weakness to start nailing down some good profit. So I'm going to take you through another example, which is in Verso. This is back last year, and another volatility contraction pattern. So let me just get the chart set up. So you can see here again, this rectangle box highlights what the volatility contraction pattern is. It's that sideways movement. Volatility in price is diminishing. Volatility in volume is contracting. Okay, the supply has been soaked up. There's not many weak hands. There's not many sellers. And then what we're looking for is the breakout from the highs. Let me get a rectangle. So on this bar here, this candlestick this day, when we see that huge increase in volume and the price going higher, that is where we'd enter our first position. You can then see we've got one contraction, two contractions on low volume down here before, look at all this volume coming in, okay, and the subsequent price moving up significantly. Again, you can see this thing really does rocket. So if you're looking to trade volatility contractions, they're a very good way, and they're the best method to use on breakout trades and momentum trades for when the supply from the weak hands has been accumulated and the share price is ready to move higher. It's a very effective way to compound your capital quickly, and you can assess the risk on each trade, and it's very easy to set stops. And it's also a chart pattern where we have an intended plan, that we know what we expect the share price to do before we enter the trade. If it suddenly doesn't break out and there's not that follow through volume, we know something is wrong, and actually we can exit the trade, sit on the sidelines, wait again till we see the price action and volume confirming what we think will happen. It may not happen. Okay, so then we just sit on the sidelines, we're patient, we go find something else, we keep the stock on our radar. We may never trade it, or we might trade it. It's all about patience and waiting for the right setups. So that's what a volatility contraction pattern is. It works best with breakout trades and momentum stocks. It was coined by Minervini, and I highly recommend his books, How to Trade Like a Stock Market Wizard and Think and Trade Like a Champion. If you like this video, please subscribe, comment down below, give it a thumbs up. If there's any volatility contraction patterns you're currently looking at, please post them below so everyone else can have a look at them. And if there's any stocks you'd like me to look at, just post below and I'll have a look at them for you.